one word, and that one word is shortage. The latest figures from SQM Research show that the number of properties listed for sale across Australia was largely unchanged in February compared to January, but were 14% lower than the same time last year. In Sydney, listings are down 26% year on year, and Perth are down 20%, and Hobart are 17% lower than the same time last year. And this continues a situation in which we're seeing a shortage of listings at a time of high demand. Now, earlier data from SQM Research showed that the national average vacancy rate dropped from 2.5% in December to 2.1% in January. And while there are seasonal factors in that result, the significant thing is that vacancies now are lower than a year ago, which means that the trend of vacancies getting smaller and smaller is continuing. 6 of our 8 capital cities have vacancy rates below 2.5%, and 3 of them are below 1.5%, and only Sydney and Darwin are above 3%, and then only marginally show. Vacancies are low also in many of our key regional centres. So listings for properties for sale are low and residential vacancies are low, and what this means is that we have an undersupply of homes available in Australia, and I think it's going to get worse. In 2018, Australia built 225,000 new homes, but last year we built only 175,000 new dwellings. And building approval figures month by month show that this undersupply situation is going to continue for the foreseeable future. The latest building approval figures for January showed further decline, including most notably a big drop in the number of new approvals for apartments. Now, this all means that we have very low supply of dwellings for sale and for rent at a time when demand is very high, and that's putting upward pressure on rents and on property prices. And it's already happening in terms of prices. The latest figures out yesterday show that house prices are rising strongly in many of our capital cities. In annual terms, Sydney's up 10%, Melbourne's up 8%, Brisbane's risen almost 8%, and the rate of growth in Brisbane is getting stronger and stronger. Hobart's up 12% year on year, according to SQM Research. Now, one city where vacancies have been falling steadily and where listings for properties for sale have also been declining markedly is Brisbane. And this is just one of a number of factors pointing to a rising market in Brisbane, with buyer demand increasing at a time of decreasing supply. So I'm expecting Brisbane prices to deliver in 2020 the best growth rates seen in the last 5 or 6 years. And I outline where I expect prices to grow the most in my new 2020 edition of the Top 5 Brisbane Hotspots report, which you can get on the hotspotting.com.au website. So get yourself a copy to find out where I see the growth happening in Brisbane and why. And if you have any questions, contact me, Terry Ryder, on Ryder@hotspotting.com.au. Bye for now.